It's not the answer to the recession. It's the answer to the future of the financial system as a start, just as a small start, is the fact that in a debt-laden society, everybody owes everybody money. And when things go wrong, you don't know who owes what to whom. And that's what happened with Lehman Brothers and many of these other things, is we don't know who owed what, because there's daisy chains of all of this debt. Blockchain solves that. You know immediately who's the owner of the asset. Also, it gets around a lot of other legacy financial problems. You know, ownership is one. There's problems within custody, within the deep hearts of the plumbing of the financial system, that if somebody defaults, almost everything blows up. And blockchain solves that again because of this ownership issue. It makes transfer instantaneous, so you don't have 2 or 3 day settlement periods. And there was a number of things. But I also understood that that's blockchain itself. But Bitcoin has these 2 attributes. One is this store of value. So it's like gold because it's a scarce asset, like artwork and other things, real estate. But it has this other thing, which is this call option on the future. What could it be? What could it be used for? What could this technology be used for? And that's really the network effect that is Bitcoin. And it's the same for the whole crypto space. So if it really was going to be a store of value and the central banks were printing an unprecedented amount of money, then like equity prices, real estate prices, gold prices, it should go up in value. But it should go up a lot more because it has this call option on a potential future financial system too. So that was really what I saw. And the chart started playing out exactly that way, where Bitcoin started outperforming every other asset on earth, and it became no point to own any other assets. Now, this year has been less that. Bitcoin has kind of kept pace with other assets, but you know, in a weird way, it went up a lot first and then came down a lot. But over time, it's generally outperformed everything. In October, I started seeing the chart of Ethereum versus Bitcoin and looked like it was going to start outperforming, just a chart pattern and a hunch. And then I started digging into, okay, how do you value Bitcoin and Ethereum? So we've had the stock to flow model, but really what it was to me was also a network. And you use something called Metcalfe's law to value a network, which is basically a network has value proportionate to the number of people on the network and the number of interconnections they have with each other. So I could see that in Bitcoin, and you could pretty much prove it out by putting like number of active wallet addresses and the price of Bitcoin on a chart, and you basically get a very high correlated answer. And I could see people attacking anybody who talked about Ethereum or other tokens online. So I'm like, I need to find out how you price Ethereum, because I have a feeling it's exactly the same as Bitcoin. And what was interesting is I used the same mechanism and it's priced exactly the same way. But what was more surprising is the adoption of Ethereum was much faster than that of Bitcoin at the same stage. So I'm like, wow. And then you start realizing the number of things being built on it, the applications, the number of developers involved, and the speed of the increase of the number of users. So there's a lot of interconnections plus a lot of users. That was going to become very valuable. So then add a chart onto that again. Chart of Ethereum looked like it was going to break out, and that gave me everything I needed. Well, they continue to show that, you know, even Ethereum has been having more volume in certain days than Bitcoin has. The wallet address growth is faster than Bitcoin. In every way, it's outperforming Bitcoin, except in market cap. I think we call it the flippening when Ethereum is larger than the market cap of Bitcoin. That's nothing to say that I don't believe in Bitcoin. Bitcoin is a different thing to Ethereum. Many hardcore Bitcoin believers think that all applications will be built on the Bitcoin blockchain. But I think that's more a hope than a reality. The reality is many different ecosystems will get traction for different things. And Ethereum right now has DeFi, NFTs, social tokens, all on it. Mm-hmm. So it doesn't have to be money. The next part of the equation comes with the introduction of the EIC 1559 token, which essentially lowers the supply of Ethereum by burning Ethereum. And then there's the ETH 2.0, where we move to proof of stake, which again, will lower the gas fees, but also will lower supply even further. So it becomes a super scarce asset with massive use. So probability is it's going to do pretty well. So DeFi, I've invested in some of the protocols, but I have not used DeFi. I'm not really a yield guy. I don't really care about yield. I'm a more macro guys tend to be price appreciation people. So I tend to look for those opportunities more than I look for yield. And I don't think we yet understand the full risks in DeFi, which protocols are going to work, which ones are better, which ones aren't. But I've invested in some equally weighted basket of a bunch of them just to have exposure, just so I get understanding. And then with social tokens, NFTs, I've invested in some of the NFT platforms, but the social tokens, there's not many of them around, but I've invested in those too, more significantly, because I think they are, maybe not even for this cycle, but I think they're going to be a huge part of the global business model going forwards, when businesses start coalescing around communities and how communities can drive their own value system by using tokens and network effects to increase the size of it. So I'm really excited about where this is all going. Okay, so first order thinking is, oh my God, assets are going to sell off. This is terrible for crypto. Look at March 2020, oh my God. What you should be thinking is, what was the outcome of March 2020? Massive central bank stimulus and government stimulus on a scale of which we've never seen in our lives before. So let's say there is a risk off. Okay, it's not as big as March 2020. Maybe Bitcoin goes back down, breaks a new low of this move and gets to 27,000 or whatever it is. And let's say equities are down 10 or 15%. And the dollar's going higher, a lot higher. And that's making the markets feel uncomfortable. And we start to see the data slow down. What is the outcome? The outcome is exactly the same. The central bank will stimulate more, and the government will try and push through an even bigger stimulus package. What does that do for Bitcoin? It explodes it higher.
Go back up.
So the first order effect is, oh my God, Bitcoin's going lower, but everybody should be thinking, if this happens, then this is what's going to drive it to 200,000.